Hi everyone, let's cover my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the higher probability scenarios and first off a WXY double zigzag. In this scenario, we have a finished zigzag in wave W, wave X could be finished at the low, and then we look for another zigzag to the upside in a wave Y. If price would move towards the downside and does take out this low over here, we can still count a flat in a wave X, being a wave A, B, and then a wave C towards the downside. By all means, we do not want to see price move below the 0.7 Fibonacci at 79.1k taken from the start to the end of wave W, because if price does, then the probabilities for a double zigzag to the upside will significantly decrease. The probabilities for a flat in a wave X will also significantly decrease if price moves towards the upside a little bit more and touches the 1.618 over here at 87.9k, which is a Fibonacci taken from this high over here to the low, as a flat is counted as a wave A, this has to be a wave B, and then a wave is C to the downside, and a wave B touching the 1.618 is a very uncommon target for a wave B. So therefore it lowers the probabilities that price would move below this low over here in a double zigzag scenario if you do hit the 1.618. If we then look at the second scenario, then this is your more bullish scenario, as this is an impulse. So here we then have a wave 1, 2, second wave 1, a second 2, and we are looking for continuation to the upside, possibly another 1, 2, but by all means you want impulsive continuation, which also means you want volume to come in. Price needs to move. We want to see big candles, high amount of volatility, and also volume to continuously increase. Now, what is interesting in this scenario is that this wave 2 over here, this wide wave 2, which is a lower degree wave 2. Let me explain this first. So we have the blue count, 1, 2, 3, 4, 5. The blue count is your higher degree Elliott wave impulsive count. And inside the wave 3, we have a lower degree impulsive count, which is the wide count, 1, 2, 3, 4, 5. Now, preferably, a lower degree Elliott wave count is a little bit shorter in time and price, or quite equal to the higher degree Elliott wave count in time and price. Now you can see that the wide wave 1 here reached the 0.618 trend-based fib extension taken from the start to the end of 1 to the end of 2, which is perfectly fine. It basically shows that the second wave 1 is shorter than the first wave 1, which is quite nice to see for a lower degree wave 1. However, this wave 2 over here is about 3 to 4 times bigger than the blue wave 2. And the blue wave 2 is your higher degree wave 2. And you have to look at the blue vertical lines. Let me quickly remove the white one. So the blue vertical line here is a fib time that is taken from the start to the end of wave 2 to the end of this second wave 1, comparing this blue wave 2 in time with the white wave 2 in time. And you can see if we end wave 2 over here, it ended between the 3 and 4 fib time. So this wave 2 is significantly longer compared to the first wave 2, which is not what you like to see in a multi-1-2. Now, time is never an invalidation. It is also never a confirmation. It's just something that helps with probabilities. And the fact that the second wave 2 ended between a 3 and 4 fib time compared to the higher degree wave 2 does lower the probabilities for a multi-1-2. The invalidation for this scenario is taking out the low at 81.1k. Then we get to two lower probability scenarios. First off is, again, a double zigzag, but it's counted a little bit differently. So in this scenario, we then have a 3-wave structure to the upside in a wave W, then a 3-wave corrective structure in a wave X, and then this is your second ABC in wave Y. This then gets you a W, X, and a wave Y. Now, besides price, time is very important in Elliott waves as well. It's also known as ratio analysis. That's why I always use time in my Elliott wave scenarios. And you can see the vertical line here on my chart, which is again a fib time. But this one is taken from the start to the end of W to the end of wave X. And I am comparing wave W with wave Y. Now, quite commonly, your wave Y and your wave W are quite similar in time when you look at a double zigzag. And if they're not around the 1 to 1/5 time, they're usually between a 0.618 and a 1.618, right? Or maybe a 2 or 2.618. But this wave Y here is over 6 times longer than your wave W, which lowers the probabilities for this scenario. But I included this scenario because arguably this is, of course, a bearish scenario where you look for price to move down and quite simply take the low at 76K, right? You need bullish and bearish scenarios. The previous two are arguably bullish because you look for a bit more upside still to come. And this one would actually be bearish and you look for price to continue down. Lower probabilities though. A second bearish scenario would be a simple zigzag ABC, after which we then look for a bigger rejection. Now the most common target for C is actually a little bit higher, 87.7, 90.9K. Minimum target has already been reached, but by all means after C you look for a bigger rejection to the downside. What negatively impacts the probabilities in this scenario, however, is the subdegree count inside your wave B. We have to end wave A here, and your wave B can really only be counted as a WXY. We can't count a triangle here, that's invalid. We also can't count a flat A, B, and then a wave C, 1, 2, 3, 4, 5. We never got that final leg. So that leaves us with a WXY, and this WXY then has to be counted as a flat in a W, and wave Y then has to be a zigzag structure. Now, in a bit more detail, yes, your wave B for A, B, C is high enough. It did touch the 0.9 fib taken from the start to the end of A, which is a minimum target for B. Counting this move to the downside as a 5-waver though on the 15-minute is a little tricky. As you can see here, we got a move down, sideways structure, and then another move down. But we didn't really have a 1, 2, 3, 4, 5, right? Where is that final leg? So that impacts the probabilities to count that first wave W as a flat. And then secondly, in Y, we need to count a zigzag. So this has to be a 5 somewhere hidden in here, right? A 5-wave structure, some sort of a diagonal, whatever. Then you have your 3-wave range and another 5 to the downside. Now, what impacts the probabilities here is that this is such a deep corrective structure. So this is your first, this has to be your A in that case, and all of this has to be a B. But you can see that price moved far below your wave A. And if we look for a flat, for example, right, that's generally the deepest structure, a wave B of a flat or a wave X of a WXY. But generally in a corrective move, price is not going beyond the 1.618, right? That's really a maximum target for B in a flat or for X in a WXY. And you can see that price moved below this twice. So it does lower the probabilities to count this as a zigzag A, B, C. And we can't really count this or this as our wave A pivot because this is clearly a 3-wave structure to the downside. Then price moved up, took out these highs. So we also can't count wave A over here as like a 1, 2, 3, 4, and then a wave 5, right? So it's a big struggle to count this as a very nice wave B, WXY structure, and a triangle and a flat do not work. So that is what lowers the probabilities for this particular scenario. So I had to cut the video here because I got a call during my recording and it happened to be very urgent and I had to leave the house unexpectedly. And now you can see that as I am back, there is more information on the chart, the bearish CVD divergences I actually wanted to talk about before leaving the house have now played out because price here took out the low. And also the update, this update is online later than usual, but hopefully you understand. So let's then wrap things up with the news here. 3 p.m. Central European time, we have some high impact news. Make sure you trade safe, can increase the volatility. If we then look at the polylines and the probabilities, then currently the best looking highest probability scenario would be the double zigzag, which is the blue polyline. The others have lower probabilities. No surprise though to see a little bit of a retracement. Most of the polylines are looking for that retracement. Honestly, it would still be nice though to at least touch some resistance because for me this feels a little bit like the middle of nowhere and to the upside 88.2, 88.5. I have a resistance box above that. I have 92.4, 93.4. To the downside, we still have untouched support here, 80.3, 81.1. And to the downside, important support is also the point of control of this range here, sitting at about 83.2K, currently bouncing on the value area high, as you can see here, at 84.8K. So those are levels that I do keep in mind. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.